Hey everyone, I hope all of you are doing great. Well, we've started our journey for the SPM BV Fast Track lectures for the upcoming examination. So if you are there in your CMA finals and if your examination is close by, you are giving your group 4 and you want to complete this subject with practice and clarity, well, you can purchase the SPM BV Fast Track lectures from us. All the details are there in the description box. Well, what is these lectures then? These are a part of the paid lectures. The first couple of lectures will be there visible on the YouTube channel, and then afterwards it will be there only for the paid students. Now, talking about paid, the rates are very reasonable. You can just WhatsApp on the number, you will get all the details. Okay, the SPM part, the lectures are already there. The demo lectures are already there by CA Ravina Kumar ma'am on the Hgpa YouTube channel. The business valuation lecture, well, today is lecture number 2. If you have not seen the business valuation lecture number 1, I'll put a link somewhere over here. Please do check that out and then only proceed watching with this lecture. Okay. Now let us start our journey with this business valuation lecture number 2. In the previous lecture, we started out with a beautiful chapter called as mergers and acquisitions. We did a bit of concept. We did solve sums. In today's lecture, we are going to concentrate on the material given by the institute, the sums from that. The roughly 28 to 29 questions, we are going to complete that over the journey. In today's, we have taken 4 to 5 questions from study material. So we'll try to solve that. It will boost your confidence. And also one more thing, please do write everything because the exams are in offline mode. Presentation must be top class because there will be marks for that. There will be marks for step marking also. Okay. So please do concentrate on the writing part. Okay. Now, before I proceed with today's lecture, I'll just give a quick recap of what we've done in the previous lecture. Okay, so in merger acquisition, we saw the basic concept of what is transferor, what is transferee company, what is the meaning of cost of merger, what is the meaning of merger gains, if any, if it given the question. So we saw a bit of that. Also, remember one thing: the cost of merger. How do you compute that thing? The price which you are paying, the acquiring company, what they are paying to a target company, minus the value of that company. Whatever extra you are paying, that is your cost of merger. It is also called as goodwill. Point number 2, merger gains. What is that? That is a synergy effect. So I've given you an example in my first lecture that if Idea and Vodafone, they come together, right? But if they form something new and the new thing is a much more improved version of what was there before. So if the new version is much more than the individual values, the extra effect, that is called as the synergy effect, and that only means your merger gains. Okay, I've also given you in writing yesterday the steps for cash offer, because see, remember one thing, if the acquiring company wants to purchase the target company, it can do by 2 ways: by giving them upfront cash to every shareholder, and second, by giving stock of their own company. For that, we need to compute the share exchange ratio. Okay, talking about share exchange ratio, we can compute share exchange ratio by either your MPS method, by EPS, whatever the base may be, which is given in the question, of the transferor company divided by transferee company. Remember one thing, share exchange ratio is a much more important step before you do anything else, because if there is stock offer mentioned, you need to compute share exchange ratio, because if you do not do it, you cannot proceed ahead. Okay, we did pretty I think couple of sums yesterday. So today study material questions have been covered over here. I have given the number also for your reference of which number I have taken. Okay, I'm going to cover every question, don't worry about that. Okay, sure. Let's start our business valuation lecture number 2 from now. Acquiring company is considering the acquisition of target company in a stock for stock transaction in which target company would receive rupees 90 for each share. Remember one thing, they've already given you upfront that we are going to pay rupees 90 for every shareholder of the target company. Very simple. The acquiring company does not expect any change in its PE ratio after the merger and chooses to value the target company conservatively by assuming no earnings growth due to synergy. So they've also given you indirectly, there are no merger gains at all. There is no synergy effect. The PE ratio before and after remains the same. That's the indirect thing which they've given to you. Calculate 6, 7, 8. There are 8 questions which you need to compute. Okay. Important question. Please pay attention. Okay. The first thing, purchase price premium. Now, what do you mean by this? Remember one thing, They've already mentioned what is the purchase price, and they've also given you details of both the companies. You are targeting this company, right? The market price is rupees 60. You are ending up in paying 90 rupees. What is the extra premium they're asking? Okay, we'll compute and we'll give it to them. Purchase premium. Purchase price premium. Give me one sec. Purchase price premium. Okay, very simple. How much you're paying? You're paying 90 bucks. Divide by rupees 60, that's the value. So how much more you're paying? It is 1.5 times. That's the premium. Okay, that's your first question over there. Simple. Second question, the exchange ratio. I just mentioned you. Exchange ratio can be computed. Share exchange ratio, which is very important because without that you will not be able to proceed with any of the questions. Share exchange ratio. How much are the acquiring company giving out shares in their own company? So they've already given you, 90 rupees. So you can do one thing. The price of target company, that is the transferor company, divide by price of the acquiring company, which is given in the details, 50 rupees. So rupees 90, that is what you're paying, and rupees 50. Okay, 90 divided by 50, the answer is 1.8. What do you mean by 1.8? I'll just write it over here. 1.8 is to 1. That means for every one share in target company, you will get 1.8 shares of the new company. That is huge. Okay, so logically, the next question has to be very simple. Next question has to be, how many new shares will be issued? I think that's the next question. Yes, that's the next question. Number of new shares issued by the acquiring company. Very simple. So I'll just put here for your understanding. 1.8 is to 1. That if you have one share in the target company, how many new shares you will issue? So how many shares you have already? You have 20,000 shares. So I'll just do it. This is for your reference, right? 20,000. How many? So into 20,000, that is 36,000 new shares will be issued. By whom? The acquiring company. New shares will be issued. Okay. Now remember, next sir. Okay, we've got this. This is for our reference. Okay, but how to write in the examination? See, you can make your own formula. So the existing shares of the target company multiplied by the share exchange ratio. That's the formula for the new shares calculation. Okay. So 36,000 is your answer. Okay. I think we're down with 3 questions. Fourth, post-merger EPS of the combined firms. What do you mean by EPS? Earning per share. How do you compute EPS? Total available earnings to the equity shareholders, like that's the numerator, divided by total number of shares. Post-merger EPS. Now, first I'll do one thing. I'll write the formula first. Post-merger EPS. Post-merger EPS. Okay. Total earnings after merger. Total earnings after merger divided by total number of shares. Okay. Now see, we need to compute numerator and denominator first. Okay. Do you have total earnings after merger? See, the total earnings after merger will be the addition of the earnings before the merger, because they have clearly mentioned there is no merger gain in this. So your answer will be the addition of 2,50,000 plus 72,500. Those are the earnings. So 2,50,000 plus 72,500. It is 3,22,500 rupees. 3,22,500 divided by how many new shares are there? Now tell me one thing. The acquiring company already has 1,10,000, and how much new shares they are issuing? We have already computed 36,000. So the total number of shares will be 36,000 plus how much was that? 1,10,000 10,000. It will be 1,46,000 shares. 1,46,000 shares. And what is the answer? Divided by 1,46,000. It is rupees 2.2089. I'll round it off to 9. This is your new EPS. Okay. This is your new EPS. Next. What is the pre-merger EPS of the acquiring company? That's a very simple question. You can just solve it here only. Pre-merger EPS, that is before merger. Pre-merger EPS. This question should have been first, and then this would have been there. Post-merger. So what is pre-merger EPS? Very simple. Earnings divided by number of shares. Okay. Earnings before the merger, obviously. Divided by number of shares. Number of shares. How much is it? Earnings are how much? Earnings are 2,50,000 divided by 1,10,000. 2,50,000 divided by 1,10,000. The answer is rupees 2.27 rupees. That's your EPS pre-merger. You can see one thing. You can check one thing over here. The post-merger EPS for the acquiring company has reduced. So that is not a win-win situation over there. Okay, for the acquiring company, because see, the post-merger EPS is 2.209, whereas the old EPS which they had, it was 2.273. So there is a reduction. Okay, let's see if they've asked that thing or what. So we have done with pre-merger also. Sorry, pre-merger EPS. The pre-merger PE ratio. Pre-merger PE ratio. I hope you know what is PE ratio. I'll explain in a bit. Okay, pre-merger PE ratio. PE ratio. Pre-E stands for price earning. This had come in the previous lecture also. See, price earning, the ratio is MPS upon EPS. But what do you interpret from that? So, I'll just write over here. PE is equal to MPS divided by EPS. How many times the shareholder is ready to pay for that company share as compared to the earnings? So PE ratio cannot be even more high, because that means the company is very overvalued. Okay, so remember one thing, many investors and many investment bankers also take the base of PE ratio to actually understand the company's investment. So whether to invest in a company or not, this is an important variable. Okay, now they want the pre-merger PE ratio. Let's give it to them. How much is it? MPS is 50, and what is the EPS? We've just computed the EPS, I think, where it is 2.273. Rupees 50 divided by rupees 2.273 divided by 2.273. 21.99. How much was the MPS? It was 50 and EPS was 2.273. I'll just compute one more time. Divided by 2.273. Yes, 21.99 times. Next, post-merger share price. They want the market cap price after the merger. How to compute this? See, it's very simple. You have already got the PE ratio. How much is it? 21.99. Okay. So what is the formula for this? MPS upon EPS. I write 21.99. You want the new MPS, right? So we'll put that X. We don't know what is the new MPS. And do you have the EPS? Yes, you have the EPS also. And how much is that? Post-merger EPS 2.209. 2.209. So how much is the answer? The answer comes out to rupees 48.59. 48.59. That's the post-merger price after your merger, right? And last one they're asking is post-merger equity ownership distribution. Very simple. They just want to tell you how much is the percentage distribution. Tell me one thing. 6, 7, 8. You have total number of shares 1,10,000 was the original, you issued 36,000. So out of 1,46,000 shares, the target company owns how much? We are issuing how much? 36,000 shares. So how much is this? $24.65%. If this is the answer of this, the acquiring company will have how much? That is 100 minus 24.65, and that will be 75.34%. That is basically the bifurcation of the ownership. This was a pretty easy sum. I hope you have got it. It's very simple. Okay. And also one more thing, the paid lectures, the students who have bought it, you can, if you don't understand anything, if there's any doubt, you can just drop me a WhatsApp or voice note. You can drop me. I'll be very happy to answer it. Okay. So I've already mentioned this thing in the first lecture also. So when we provide the recordings, we not only just provide it, you also get all the faculty details also. You can just have a word with them. Anything, any sort of problem you have, you can directly interact with me. Okay, for business valuation. Okay. This was question number 6 from your material, and this is yes, this is question number 7 from your study mat. Let's get on to this. Okay. We have to solve many sums so that the practice, you can practice a lot, the confidence will rise for this business valuation merger acquisition. Okay. Chalo. R Limited is intending to acquire S Limited. Okay. So R Limited is the transferring company, the acquiring company, and the following information are available in respect of both the companies. Okay. So R Limited is the acquiring company, and this company is your target company. This company is your, let's see what details they have given. They have given you earnings, they have given you number of outstanding shares, they have given you market price per share also. Okay. They've asked 3 questions. What is the present EPS of both the companies? I think this is a very simple question, the first one. If the proposed merger takes place, what would be the new earnings per share for R Limited? Can I say one thing? They are asking you post-merger EPS. They are asking you EPS after the merger. They are giving more information. Assuming merger takes place by exchange of equity shares and the exchange ratio is based on the current market price. So they have given you one hint over there. While computing a share exchange ratio, please compute by taking market price into consideration. Okay, we'll do it. We'll do that. And what's the third question? What should be the exchange ratio if S Limited wants to ensure the same earnings to members as before the merger took place? Okay, this is a very important question. Okay, you can mark that as important. See, you might find few basic questions here and there like present EPS and all that, but this, when some question comes very unique, very different, please do mark it. Please keep a, what do you call a bookmark over there. Okay, a sticky note where you have to solve this before the examination. The third question is important. So what they're asking you, what should be the exchange ratio if S Limited, the target company, wants to ensure the same earnings? So how much are the earnings? 90,000. So what exchange ratio you will give? So that's the third question. I'll tell you when I come to that question. Okay, we'll solve one by one. First question is very simple. They've asked you what? Present EPS. They've asked you present EPS. Computation. When you can start solving, okay? Don't wait for me. Computation of EPS. So the two companies, R Limited, S Limited. R Limited, S Limited. Okay. They have given you the earnings. They have given you the earnings. They have given you the shares also. How much are the earnings? 2,50,000, 90,000 rupees, 2,50,000 and rupees 90,000. They have also given you the shares. This is 50,000 and this is 30,000. Okay. So how much will be the EPS? So this is one number, this is two number. EPS will be 1 divided by 2. Your answer will be 2,50,000 divided by 50,000. This will be rupees 5 and this will be rupees 3. Okay. Now, first question, very simple. We have done this question. Second, if the proposed merger takes place, what is the new EPS? That's I've already written over there. They're asking you post merger EPS. Remember, for computing post merger EPS or even the theoretical market price, check whether merger gains are there or not. Now, there is nothing given in the question about merger gains. This means what? The earnings after the merger will be the addition of the earnings of the before merger. So basically this plus this. But remember one thing, that is your numerator part. What about the denominator? You need to have total number of shares. So that is we have 50,000. No. How many new shares will you issue to the target company? So for that, for the second question, your step one for the second question will be computation of share exchange ratio. Then you will get how many shares you will issue. And then you will come for the post merger EPS. Okay. So please keep that in mind. For the second question, please compute the share exchange ratio first. Please compute the share exchange ratio. Remember one thing. They have given you the base, okay? They have given the base. They're telling you over here, ki please compute the market price. So, I've told you transfer divided by transferee, market price per share of, what is the name of that? S Limited. Upon market price per share of R Limited. R Limited, okay? How much is it? 14 divided by 21. 14 divided by 21. Okay. 14 divided by 21. How much is it? 0.6667:1. Okay. This is your exchange ratio. This means what? For every one share of target company, you will receive 0.66 shares of the new company. Okay. So can we say one thing? Can you compute the new shares to be issued? New shares to be issued. See, remember one thing, whenever you compute a share exchange ratio, by default, the next step has to be this only, new shares to be issued. Okay. So how much is it? How much is the existing shares? It is 30,000. So 30,000 into this. It will be how much? 20,000 shares. 20,000 new shares. So what is your next step? Please tell me. The total number of shares after the merger. So how much will be this? You have an existing shares of how much? 50,000. You have existing shares of 50,000 plus these new shares. Okay. So total will be 70,000 shares. I hope you have got this. Okay. We have not completed the answer of second question. We are still to reach over there. Okay. Now please tell me, they have asked you post merger EPS. So for the post merger EPS, what I'll do is total earnings divide by total number of shares, which I've already computed. Total shares. Okay. How much the total earnings? Very simple. 2,50,000 plus 90,000. This is 3,40,000 rupees. 3,40,000 upon total number of shares 70,000. Very simple. Very simple. Your answer is 4.857 approx. I hope you have got this. 4.857. Okay. So you're down with the question number 2. Okay. Now, third question, which is important. They are asking you if what should be the share exchange ratio if S Limited target company wants to maintain the same earnings. This means what? They have to maintain 90,000 only. So what should be the share exchange ratio? Now, I can tell you one hint over here. If you want to maintain your same EPS, then you have to compute the share exchange ratio not according to MPS but according to EPS. So your share exchange ratio will change, your number of shares issued will change, your total number of shares will change. So this is what we have to do over here. Okay. So you write over here question number 3. If target company wants to maintain the same earnings after the merger also, then the share exchange ratio will be computed by taking EPS as the base. Okay, simple. Now we'll start a calculation. So a new share exchange ratio based on EPS will be transferor divided by transferee. So how much is the EPS? Okay, we need to compute the EPS first. Okay, you can compute it here only. So what is the EPS of both the companies? 90,000 divided by number of shares 30,000. We have computed, right? It's here, sorry. It's 5 and 3, my bad. 5 and 3, we've already computed. So this will be 3 divided by 5. Okay, so what is the new exchange ratio? 0.6. Okay, what does this mean? 0.6 is to 1. What was your share exchange ratio first? It was 0.667 is to 1. Now it is 0.6 is to 1. It's gonna change a lot of things now. Now, number of shares to be issued. Number of shares to be issued. Your existing shares, how much is it? How much it was? 30,000 into 0.6 will be 18,000. So 0.6 into 30,000, this will be 18,000 shares. 18,000 shares. And total number of shares? Total number of shares, this will be 50,000 plus 18,000. 50,000 plus 18,000. This will be 68,000 shares. Okay. Now tell me, what is your post-merger EPS? Post-merger EPS. And this will be total earnings. How much it was? Total earnings, it was 3,40,000 divided by 68,000 shares. What is the answer? And that is rupees 5. Okay, that's a new post-merger EPS. Now just to cross-verify this thing, the shares to be issued for target company was how much? 18,000. And how much the post-merger EPS? It is 5. This answer should come 90,000, which is matching exactly with your before earning. So this is your answer, which matches with this. Where is your this 90,000? That's what they're asking you. Okay. So this is one more simple question. Question 3. Please mark the third question as important. This one. Okay. Let's move on to the next question. Okay. Now this question I picked up. Same study material. This is 8. Question number 8. Okay. Chalo. Let's start doing this. A Limited is considering the acquisition of B Limited. Okay. Which stock? The relevant financial information is given below. Okay. Let us see. They've given you earnings. They've given you equity, number of shares. They've given you EPS. They've given you PE ratio. Okay. They've asked you 5 questions. Important. What is the market price of each company? I think you can easily get it. You know why? Because they've already given you PE ratio. That is MPS upon EPS. So they've already given you EPS. You can easily find out what is MPS. So this first question very simple. What is the market capitalization of each company? What is market cap? Simple. Market price per share, which I've already computed in question number 1, into number of share. You will get market cap. Okay. So even this is simple. If the PE of A Limited changes to 7.5, so right now it is 10. If it changes to 7.5, what is the market price of A Limited? Simple, we can just give it to them by calculation. Okay. Does market value of A Limited change? Yes, it will change because the PE ratio has changed. And what would be the exchange ratio based on market price? Take the revised price of A Limited. Okay. We'll solve one by one. Let us see where does it go. Okay. First question, what is the market price of each company? So computation of market price, computation of market price, computation of market price, name it is A limited and B limited, A limited, B limited. Okay, now first PE ratio, how much is it? 10 and 5. So 10 times and 5 times. How much is your EPS? They have already given you EPS 1.875 and 1.25. 875 and 1.25. Okay. Why am I writing this? Because they want market price per share. So what is the formula? So it is PE is equal to MPS divided by EPS. Okay. You can simply get the market price per share by multiplying. So 10 into 1.875, which will give you rupees 18.75, and 5 into 1.25, it will give you 6.25. 6.25. Okay, that's your new market price per share. This is your new market price per share. Okay, now that's your answer to the first question. Very simple. Second, what is the market cap of each company? As I've already mentioned, market cap is number of shares into this price. Okay, so market cap of each company, it will be same, number of shares, next market price per share, which I've already computed, 18.75 and 6.25 rupees. Okay, and number of shares are how much? They've already given in the question. It is 4 lakhs and 2 lakhs. 4 lakhs and 2 lakhs. So the market cap, the market capitalization, simple, 4 lakhs into 18.75, this will give you rupees 75 lakhs, and 2 lakhs into 6.25, this will give you 12 lakh 50,000. 12 lakh 50,000. That's your market cap. This is your market cap. Okay, you have got the second question also. I think it's very, very simple. Okay, now if the PE of A limited changes to 7.5, okay, what is the market price of A? They're only asking you about acquiring company. So we'll give them. So PE is equal to MPS upon EPS, and they are telling the new PE ratio is how much? 7.5. We'll write here 7.5. The EPS we already know. The EPS is 1.875. So the new market price per share will be 14.0625. This will be the new market price per share. Okay. Now the next question. Does market value of A limited change? Yes, the market value will change because the new market cap will be according to this price now. So fourth question will be market cap according to the new one. So this will be number of shares. I think it was 4 lakhs. 4 lakh shares into rupees, the new price 14.0625. How much is the answer? The value is reducing. It is 56 lakh 25,000, whereas here you had 75 lakhs. Now it is only 56 lakh 25,000 because of the change in your PE ratio. And the fifth question they're asking you is, what would be the exchange ratio based on market price? Take the revised price of A limited. Very simple. So share exchange ratio based on the revised market price. So this will be the market price of first. It was a transferor company. It was how much? 6.25. So market price per share of transferor company upon market price per share of transferee. Okay. Transfer is how much? Rupees 6.25, and the revised price was how much? 14.0625. 6.25 divided by 14.0625. That is 0.44. That is your share exchange ratio. So for every one share of target, you will get 0.44 shares of the new company. I hope you've got this question also. Yes, this question is important. Now, it is question number 9 from a study material. Why it is important? Because they've given 3 companies now. Okay, so normally we have 2 companies. So A Limited is considering taking over of B Limited and C Limited. So you have one acquiring company and you have 2 target companies. Okay, they've given information. They've given you equity share capital. They've given you earnings and they've given you market price of each share. And they are telling you to compute the price earning ratio. There is a P ratio. I think that's pretty simple. And they're also telling you to compute earnings per share of A Limited after the acquisition. So can I just write here one thing? This is nothing but your post-merger EPS. They are telling you to compute post-merger EPS. Now this is important. Will you recommend the merger of either or both of the companies? So that's your opinion. Justify your answer. Now see, what we'll do is simple. First we'll take one company. First we'll do it for A Limited and B Limited, and then we'll do it for A Limited and C Limited. This will become very easy for us to solve. Okay, so solution. First A Limited, which is the acquiring company, you can write there acquiring company, and next is your B Limited, which is your target company, which will become very simple for us to solve. The first thing what you need to solve is the P ratio. Now for P ratio, the MPS upon EPS. See, do you have the 2 things? Yes, you have MPS, but you don't have EPS at all. You need to compute EPS. So first what we'll do is, we'll compute EPS first for both. Now, for computing EPS, you need the earnings, and you need number of shares. Next, you will have the EPS. How much is the earnings? They've given you 90 CR, and for B Limited it is 18. Okay. Number of shares they've also given you. They've given you equity share capital. The face share is rupees 10. So 450 divided by 10. This will give you 45, and 180 divided by 10. This will give you 18. Okay. So EPS here it will be rupees 2, and this will be rupees 1. Okay, this will be rupees 1. Simple. Okay, now we can compute the PE ratio. Okay, now MPS divided by EPS. You have already got both the variables. Okay, so your MPS is rupees 60 and your EPS is 2. So this will be 30. And here it will be your MPS is 37 and your EPS is 1. So this will be 37. That's your answer for PE ratio. Okay. Now you need to compute the post-merger EPS. Remember one thing, we are still doing A and B. We also need to do for A and C also. Okay. So now post-merger EPS. Now what is post-merger EPS? Simple. The earnings before they will be added and divided by total number of share. Now remember one thing, for total number of share, you need to have what? The share exchange ratio. Now you can compute the share exchange ratio based on the market price per share. Okay. So market price of transferor divided by transferee. So what is the transferor market price? It is nothing but 37 divided by 60. This will give you 37 divided by 60. This will give you 0.6167. What does this mean? 0.6167 is to 1. For every 1 share of B Limited, you will get 0.6167 shares of A Limited. Okay. We also need to compute how many number of shares A Limited will issue. For that, the existing number of shares is 18. So into 18, you will get how much? The new shares to be issued. The new shares to be issued, this will be 18 into 0.6167. Now this will be 11.09 shares. Okay. Now by default the next step is how much? Total number of shares. So the existing shares are 45 plus 11.09. So this will become 56.09 number of shares. Okay. Now we can compute the post merger EPS. Post merger EPS. Okay. So total earnings, how much total earnings? 90 plus 18, that will give you 108, divided by 56.09. 108 divided by 56.09. Your answer will be rupees 1.93 approx. Okay. Now this is your answer for the post merger EPS. Okay. Now we have to compare. Now let us start doing A limited and C limited. Same process. Now A limited, acquiring company, that doesn't change at all, and C limited, that's your target company. Okay. Now first what we'll do is, we need the PE ratio. So for PE ratio, you need the EPS first. Okay. We've already got the EPS for A limited, so you can just do one thing. You can compute the EPS for C limited. Earnings, number of shares. So how much are the earnings for C limited? It is 18. Same, 18. Number of shares are how much? Number of shares are 9. EPS will be 2. Okay. Now what we'll do is the PE ratio. So the PE ratio for this will be MPS upon EPS. We already computed for A limited, and that is 30. So you write over here 30, simple, and this will be MPS is how much? 46 divided by your EPS is 2. So this will become 23. That's your EPS for PE ratio for C limited. Okay. Now what we'll do is, now the share exchange ratio. The share exchange ratio will be how much? MPS upon the market price of transferor and transferee, that is 46 divided by 60. 46 divided by 60. This will become 46 divided by 60. 0.766. Okay, is to 1. For every 1 share of C limited, you will get 0.766 shares of A limited. So number of new shares to be issued. This will be your existing number of shares, that is 9 into 0.766, that is 6.899 shares. Okay. Now new shares, total number of shares, your existing how much? 45 plus 6.899. Okay. This will become 51.89 shares. And now we compute the post merger EPS. Simple. Now we compute the post merger EPS. Rupees. So I think the earnings are the same. 90 plus 18. This will become 108. This will become 108. Same. Divide by 51.89. 108 divided by 51.89. Okay. 2.081 EPS. So we have got 2 EPS now. I think this is more favorable because this was 1.93 and this was 2.081. So eventually the answer will be A limited will take over this C limited. So A limited will take over C limited because the post merger EPS is more and beneficial to A limited. Okay, that is so. What will you recommend? Recommend A limited taking over C limited because of the post merger being more than B limited. Okay, so this is for today. We'll stop here today. I'll meet you in your next lecture. In the meantime, please practice. Okay, If you are doing it with me, if you're doing like I'm writing, if you're doing it, please solve the same sums without looking in the answers. Okay, try to do it. Practice will help you because all papers are offline mode. You need to write. Practice the same sums again. I'm doing it by scratch. We are building up a level now. In the next lecture, I'll put in my own collection also, plus your study material questions will be there. Okay, thank you so much and please stay safe.